Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a three-wave corrective structure, after which we want to see continuation to the upside. I have two different counts on the chart, a zigzag ABC in yellow and a blue WXY. The most common target area for your wave is C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the high of your wave B, and you can see we have hit the 1-to-1 here. A common target area for your wave Y is the 1.236 taken from the start to the end of W to the high of your wave X, which as you can see is also hit. So on the daily we are now hitting target areas to finish potentially a corrective structure and look for continuation to the upside. Now for a wave Y, ideally this is your low, and for a wave C we could have a count that finishes the low here, or we look for one more low and a move to the upside. But in both cases we are starting to look for price to move towards the upside either directly or one more low and then continue towards the upside. So looking for signs of strength locally is very important. If we then go to the lower time frames, then on the 1 hour time frame, the bullish scenario here where your low is finished and we are looking for at least a three-wave structure, if not potentially an impulse to the upside, is what you see on the chart here. We then have a finished 5-wave impulse to the upside in a wave 1 or a wave A, looking for a 3-wave corrective structure in a wave B or 2, and then a continuation to the upside in a wave C or a wave 3. The most common target for your wave B or 2 is between the 618 and the 0.786 Fibonacci taken from the low to the high of your wave 1 or A, giving you a target between 55.4k and 54.5k. Preferably for the bulls, you don't want to hit the 886 at 54k. If we do, then the probabilities significantly decrease for this to be a wave 1, 2, and then a wave 3 to the upside. And if we do have any move towards the upside after hitting the 886, the probabilities are much higher that this move to the upside is a wave C, which therefore increases the probabilities to then turn around, move to the downside and take out the low. So in other words, if price is going to move to the downside and hit the 886 at 54k, the probabilities increase for price to take out the low. Now, if we want to count a three-wave corrective structure inside wave B or 2, there's a couple of scenarios we have to keep in mind. And this part of the video might be quite technical, so if you don't know too much about Elliott waves and you don't really care, I probably suggest to go to the probabilities at the end of this video or to the CVD section if you're interested in CVD. Because what I'm going to do is I'm going to go through different scenarios here and explain why they are more relevant or less relevant. Now, before I go into these scenarios for your wave 2 or B, right? So that's what we're looking for in this case. I do want to highlight the fact that price over here moved to the downside and the retracement hit the 0.618 Fibonacci taken from this high to the low. Now, if this over here was the end of a corrective structure and we want to see a lot more downside, then we want to count an impulse to the downside, 1, 2, 3, 4, 5 wave structure. However, wave 4 is not allowed to hit the 0.618. It significantly reduces the probabilities. This is a wave 4. So it increases the probabilities that this structure to the downside is a three-wave structure. Now, the most bearish scenario arguably is a 1-2-1-2 continuation down, but your second wave 1 is quite a lot longer than your first wave 1, which does reduce the probabilities slightly for the double 1-2, and in general, when you hit a 618, probabilities would be higher for a three-wave structure here. So that is something that we're going to be working with the different scenarios that I will run you through right now. First of all, if we have a zigzag that is finished, so please remember what we're looking for here is AO1 is finished, and from this high to the downside we want to see a finished three-wave structure in B or 2. So the main question is, can we count a finished structure in a wave B or 2? Now currently, if we would look at a zigzag structure, an ABC or a WXY finishing over here, then okay, this is your end of 2 or B, and we want to count an impulsive structure to the upside. Now, if we want to look for impulses, we have to count a 1, 2, 3, 4, 5, but our wave 4 dipped too low and eventually invalidated a wave 4. We touched the 618 and also moved below the lows over here. And the highest amount of volume during this move to the upside was in the high over here. So preferably, we would have still seen a wave 4 and a wave 5 and an impulse, a new high on a lower amount of volume, but that is not what we got. So in other words, it increases the probabilities. This is a 3-wave structure to the upside, and therefore it decreases the probabilities that this is the end of your 2 or B, because again, if this was the end, we wanted to see an impulsive structure in a 1, 2, 3, 4, 5. The only alternative you have is a potential 1, 2, 1, 2, nope, invalidated because of the wick over here, so that doesn't really work, or a bigger diagonal, but it is too early to call diagonals. I preferably like to wait for at least a wave 4 before really starting to talk about diagonals. So in other words, probabilities are higher. This is a 3-wave structure and not an impulsive structure, decreasing the probabilities to have a finished 2 or B at this particular low, increasing the probabilities that this price section is still part of a wave 2 or a wave B. Now the second scenario would be a flat. The reason a flat has lower probabilities is actually twofold. So again, this is the high of your wave 1 or your wave A, and we are looking for a 2 or B. In this case, we have a 3-wave structure down in a wave A, right? And then we're looking for a wave B to the upside. Now, wave B is by far most commonly a zigzag or a double zigzag structure. Now, we just established that the probabilities are higher. This is a 3-wave structure in an A, B, C towards the upside, right? Now, the minimum target for wave B in a flat structure is the 0.9. So let me put it on the chart here, the 0.9, and you can see that the 0.9 is hit. However, after a 0.9 touch, if this is the high of your wave B and we want the wave C to the downside, wave C has to be an impulsive structure, meaning a 5-wave move, 1, 2, 3, 4, 5. And we have just established that wave 4 touched the 0.618, which significantly reduces the probabilities for this to be a 1, 2, 3, 4, 5 wave structure. If we do take the low, we're going to count it differently. So in other words, preferably for a flat, this is not your high, you want to look for higher. However, that means that this then has to be an ABC, that is your first structure in W, you look for an X and another zigzag up in wave Y. But then wave X hit the 0.7 Fibonacci. And the 0.7 significantly reduces the probabilities for a double zigzag WXY structure moving towards the most common target for B. Another reason why the probabilities are lower for a flat is because actually of wave A. So if we are looking for a wave 2 or B, then your wave A by itself already retraced to the 0.786, which is very deep for a wave A in a bigger flat in wave 2/B. Most commonly in a flat structure, wave C takes the low of wave A, but we don't have a lot of space to the downside, right? We only have the 886 over here, and as mentioned before, we don't want to hit that 886. It will significantly reduce probabilities for any upside, higher probabilities to take out the low. So if we think about a flat, we can move up to B, but if we then move down for C, preferably we actually not take the low of A, and we're going to end wave C somewhere here. But that then means you have a running flat, 3-wave A, 3-wave B, 5-wave C, besides of course wave X not really being very likely. But the running flat means wave C is not taking the low of A. However, a running flat is the rarest flat structure of the flat family. And you can never give the highest probabilities to a running flat structure unless all of the other scenarios fail. Now then we continue with a triangle. Now, a triangle is a structure that is not allowed to appear in a wave 2. So this triangle over here can only appear in a wave B, where this is then your A, triangle in B, continuation to the upside in a wave C, and then afterwards look for a move to the downside once more to take the low. In this case, we want to see 4 out of the 5 waves being simple zigzag structures, a 5-3-5 ABC up or down. We want to see an ABC in A, in B, in C, even though wave C, if one of the waves is more complex, it generally is wave C, and if not C, potentially wave D, turning into a double or even triple zigzag, but triples are very rare. But then we have a wave C. We then look for a wave D and a wave E. Now, the minimum target for your wave D would preferably be above this high, because in wave D, we're then looking for a 3-wave structure, A, B, C, or A, bit of a longer B over here range, and then wave C to the upside to at least take out the high here that we have at about 56.8K. Then move down in a wave E, not allowed to take the low of your wave C here, by the way. Arguably, I can move the invalidation to the upside if we believe wave C is in, which preferably it is. Then we want to have a wave E and then move towards the upside for the biggest C, and then A, triangle B, and then a wave C, continuation to the downside afterwards. But what you can see is that in this case, you're still going to be looking for price to move towards the upside after a continuation of the range, right? And then finally, complex structures, a WXY. Now, wave W in a sideways double combo can only be a zigzag or a flat structure. Now, for a flat, we needed to take this high, A, B, and then a wave C towards the downside, but clearly that did not happen. So in this case, we need to count W as a zigzag. But that then means that your wave Y in a sideways double combo is not allowed to be a zigzag. It has to be a flat or a triangle. Now, for a flat, we then count A, B, C. So in other words, you first move up and then you get a move down below the pivot here. Or a triangle, A, B, C, D, E, continuation of the range, and then you move towards the upside. So you can see that quite a lot of scenarios are causing a continuation of the range, or of course move towards the upside. The invalidation is of course very clear over here, and the target for your wave Y, 0.618 over here, has been touched, which is a minimum target for WXY. Now these are all the bullish scenarios, so from a bullish perspective, the highest probability would be the WXY here, or the triangle, because a flat doesn't really work, and the zigzag over here with a finished zigzag at the low also does not work. So for the bullish scenario, we have to keep an eye on the triangle, preferably taking out this high, or we're going to keep an eye on the WXY, either a flat ABC, doesn't look too likely at the moment, or a triangle, but a triangle generally is quite rare in the wave Y. Finally, we also have to talk about, of course, bearish scenarios, where we are looking for price to take out this low, right, before then taking out the high. A couple of things that I want to say here. Now, this will go a little bit quicker. Again, we have the 4 structures that we are going to keep an eye on. So if this over here is a low and we want all of this to be corrective, we have to somehow end the structure with one of the wave patterns that I wrote down here, zigzag, flat, triangle, or WXY, and continue down. As mentioned before, if this is the end of a corrective structure and we look for an impulse down, not great probabilities because the 618 is touched. So that is something you got to keep in mind. So let's then go one by one. Okay, the zigzag. If this over here is a low and we look for a zigzag up ABC that is finished, then wave C hit the 0.618 trend-based wave extension taken from the low to the high to the low. The 0.618 is a rare target for C, so it does lower the probabilities for a ABC to the upside. Now, second, if this is over here the high of your wave C and we look for impulsive continuation down, then this has to be a wave 1, this has to be a wave 2, but wave 2 hit the 886 taken from the high here to the low, toggle on the 886, and you can see price touched the 886, which is a very rare target for a wave 2. Doesn't give high probabilities to this to be a wave 2. And also, if this is a wave 1 to the downside, we need to count an impulse in here, and the probabilities would be higher for this to be a 3-wave structure to the downside. Now that is first of all because of the overlapping structures that we have over here, but second, the highest amount of volume in this trend to the downside was at the low, and this is typically something that you see in a wave C or a wave Y, which is of course the end of a 3-wave corrective structure. In an impulse to the downside, what we like to see is a wave 1, 2, 3, 4, 5. Highest amount of volume by far most commonly is inside your wave 3. Then range in 4, look for 5, making a wave 5 on a lower amount of volume. But we never got a wave 4 and a wave 5 on lower volume, increasing the probabilities, because that is in the end what we do, that this is a 3-wave structure and not an impulse structure. But that therefore means that the probabilities are lower again for a finished ABC structure over here, the end of the correction, and continuation down impulsively. So if we then look at a flat structure, well, for a flat, we then need to count a 3-wave A, again, that's then your ABC, and then you need a wave B to the downside. The minimum target for a flat would be the 0.9 Fibonacci taken from the low to the high of your wave A, because you're looking for an A, B, and then a wave C. But you can see we did not touch the 0.9 with this 3-wave structure to the downside. In other words, a flat is not yet valid. And if we look for a bigger structure in a flat, WXY, a double zigzag, your wave X moved above the 0.7, significantly reducing the probabilities for a double zigzag, WXY, in a bigger flat ABC. So a flat doesn't have the greatest probabilities. Then we have to think about a triangle once more, A, B, C, D, and then a wave E to the upside. Now with regards to this wave E, preferably then again more locally, we look for at least a 3-wave structure over here, so price moving up, a bit of a range, and moving up once more, at least taking out the high that we have over here at 56.8k preferably, before then ending E and moving towards the downside. So again, preferably locally, we see at least a little bit of strength and price moving up. And then we have finally a WXY. W, then we have X, and if we want to end a structure here, we need a WXY, where wave W is a zigzag, because clearly it's not a flat. So this is a zigzag structure. Then we have X and wave Y, because W is a zigzag. Wave Y can only be a flat or a triangle, which means for a flat, A, B, and then a wave C to the upside, which in other words, will still lead to price moving to the upside and taking out the high, right? Or you're going to be looking for a triangle, which then means A, B, C, D, E, which is once again a continuation of the local range, right? So even in the bearish scenarios, you can see there's confluence with the bullish scenarios between the scenarios. They are pretty much leading to the same thing locally on the lower time frames. Of course, there's always the opportunity. We have a W and an unfinished X, but that is at the moment not yet relevant, right? Now we will get to the probabilities shortly, which is pretty much a summary of everything that I've been talking to you about. Finally then, with regards to CVD divergences, we have the bullish CVDs over here at the low, bearish CVDs at the high. So these are pretty much canceling each other out, right? We moved towards the upside, created the bearish CVDs, created some more bearish CVDs here, and price moved towards the downside. I can show it to you as well if we are here on the 15-minute time frame on the AGGR chart, right? You can find this on in Discord, link is in the description. A higher low in price here, but on blue we have a lower low on the CVD. You can see other side. There we go. You can see, I have to train. You can see here that we made this low on the CVD, which goes below the CVD level that we had at the low on the chart over here. So that's the bullish CVD on blue. But then at the same time, also on blue, we created bearish CVD divergences. Lower high on price, higher high here on blue, more visibly on the 1 hour time frame. Lower high, higher high. That is a bearish CVD divergence. So we have both the bullish and the bearish CVD. The bullish one is mainly visible on the 15. The bearish one is also visible on the 1 hour. On the 1 hour here, we cannot see the bullish one, higher low in price, but there's no bullish CVD with the low on both blue nor yellow. So that means that locally, things are quite important, right? The local CVD divergences. Locally here, that's why I made the circle on the chart. So locally, we have here a higher low in price, lower low on blue once more. It's a bullish CVD where the target is taking out this high, which in many of the scenarios would be the case, right? Either in a continuation of the range or move towards the upside, of course. Now also here on a 5-minute time frame, you can see that yes, we had some bearish CVD, lower high on price, higher high on yellow, right? So that's a bearish CVD. We still have it, lower high on price, right? Yellow is still having a higher high, but you can see at the same time that also more locally on yellow, we have a higher low in price and lower lows on this CVD. So yellow is not very clear with regards to the CVDs, but on blue, we do have some bullish CVD divergences locally. Now the moment price here also touches the 886 taken from the high to the low, which we haven't yet done, the probabilities will increase for price to take out the high over here on the chart. So if we then finally look at the probabilities of the different scenarios, it is a long video with a lot of educational stuff, but on the daily, which is the easiest, the probabilities are bullish. On a daily time frame, we are looking to end a bigger corrective structure and see a bit of a bigger move towards the upside, either directly or one more low and then move up. It doesn't really matter. Now, if you want to keep things very, very simple, go to the daily, and this is as simple as it gets. Locally, on the lower time frames, the probabilities at the moment would be higher based on all the scenarios I've covered, both the bullish and the bearish scenarios. The probabilities would be higher at the moment for price to continue moving sideways, at least taking out this high here preferably, and then take it from there because of potential triangle scenarios, right? Slash bullish to eventually still take out the highs that we have here. In most of these scenarios, price moves above 56.8k, which is the high here, and then we have to take it step by step, gotta take it from there. Earlier today, we hit support as well as resistance. If I open up all my levels here, you can see we moved up from support, we hit the two resistance levels that we have here, and now we are once again in the middle of the range, right? So we are in between support and resistance. Not many levels, not much going on over here at the moment. Price moved back up and pretty much had a support resistance hit over here. The low of the range became over here resistance at the moment. But from a probabilities perspective, yeah, this is it. So we have to, if price would take out this high, we're gonna take it from there and see what price is going to give us with regards to the probabilities as they are higher to move sideways slash bullish at the moment based on the local price action and the whole analysis that we have done. So probably one of my longest videos. Anyway, thanks for watching. I hope this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.